All right, so we're going to go ahead and get started here. I'd like to welcome everybody to this webinar. My name is Hunter Smith with Metastock, and today it's my pleasure to bring you Mr. Brad Gilbert from Traders for Traders, and he is going to talk to us a little bit about trading with the markets, not against them. Now, as we do with all of our webinars, first off, we want to go ahead and get the disclaimer out of the way. This demonstration is designed to instruct you in using Metastock and the accompanying software plugins, and are not recommendations to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or information provided in connection with the company. Now that we have the legalities out of the way, I'd like to talk to you a little bit about, first off, Mr. Brad Gilbert, who will be doing the presentation today. We've had the pleasure of working with Brad for quite a few years now. Very, very experienced FX trader. He's worked for multiple banks and really has a way with educating people in the often complicated Forex market, you know, really breaking things down. Myself, I'm not much of a Forex trader, but, you know, learning you know, from Brad's videos, etc. He's able to break it down into very, very digestible pieces to where a layman like myself can go in there and kind of understand what I'm doing. Now, one of the things that Brad is going to be talking about today, and we'll cover this kind of towards the end of the webinar, is a tool called Metastock XENITH, and it's just a wonderful tool. Something that was created originally by Thomson Reuters when we were owned by Thomson Reuters. Professionals know it by the name of Icon, and as Metastock split from Thomson Reuters quite a few years ago, we were actually able to rebrand and essentially get a retail version of this tool. And Brad has done a wonderful job in utilizing this tool and being able to implement it into his education. So he's going to talk to us a little bit about some of the different ways he uses Metastock XENITH. And then, as promised, at the end of the webinar, we'll provide you a link to where you can actually get some of the same workspaces that he'll be using today. Brad, sounds like you're there.
Yeah, great. Thanks, Hunter. Yeah, no, very happy to be here, and hopefully we can show some people some new things. So what we're looking for really is a bit of a light bulb moment. And I know this is one of the hardest parts about a lot of traders is having, you know, a set structure and a set, let me just get this screen up. Having a set sort of structure to your actual trading process is one thing, but then also having the necessary tools to execute that process is the next part of it. And that's where I would say 90% of traders are missing various components. So one of the things, I just want to make sure everyone can see my screen there okay? I've actually got Reuters set up there at the moment. So what I want to do is just sort of give you a bit of a quick run through, and I want to make this as practical as possible. You know, the whole trading process, it's very methodical. It does become second nature. You'll be fine that you know, looking at indicators, which we would look at being as probability enhancers, they are things you can add on, but you need to understand the way the market works. And I know a lot of people talk about this, and they talk about how the bankers trade and these sorts of things. You know, I've read a lot about it from what people are sort of saying, and a lot of it's off the mark, right? I spent 20 years on the front line of some of the biggest trading teams in the world, and the trading structure was very methodical. Now, let me just give you a bit of a run through here. So the bankers trading system, let me just make sure I've got the right screen up there. Yep, oh, there we go. Okay, so everyone can see that. I just want to make sure that you see the bankers trading system there. So this comes back down to really simplicity. Now, when you do go into looking at trading opportunities, I know people sort of have scoured the internet looking for clues on what they should be doing and looking for the next best thing, and you know, adding various indicators to what they've got. But when it comes down to trading at the banks, right, these guys don't have time to wait for indicators, you know, which generally lag 3 to 4 hours, for them to tell them what to do. So there's two things they analyze, okay? The charts, technical analysis, and then the fundamental analysis as well. And this is one area that most people are oblivious to, or they actually sort of just push to the side because it seems too complicated. We're talking about the economic data and where those central banks come into play. And that's actually where it's probably the most important aspect. Now, technical analysis, what does this give us? Okay, well, it gives us simple entry levels. And what we're looking for is support and resistance. And I'll explain what we mean by, you know, support and resistance using my charts here in a minute. So once you have those key entry levels, right, then you can start to look at where basically you can get into the market and get out, right? And that's all the charts are telling you. They're not telling you anything else. So I know a lot of people add indicators to their charts. The bankers in their systems don't have the luxury of plugging in all these indicators into their technical systems. Well, they didn't in the past. Now they've got Reuters and they've got a few other things. They can add a few gadgets, but you know, as far as like EAs that you see on MT4, right, that are in the market, in the retail market, they aren't readily available. Then the most important part, you get your entry level, then you just need to know whether you're a buyer or a seller. And what we're talking about is direction. And that's where the fundamental analysis, the economic data, and the central banks determine that currency direction. All right, so that's pretty much it. When you've got those components, this is where if your charts and the direction are working together, that's when you're trading with the market. You know, there's nothing worse than putting an order in the market and getting flushed out within 2 or 3 or 4 or 5 minutes because you're fighting the market. And if you're looking at indicators, as I said, they are 3 to 4 hours behind. By the time your indicator tells you to buy, the market is already turned around, it's moving against you. So this is going to be a bit new to some people. My charts look somewhat naked, okay, because they don't have a lot of gadgets on them. I have tried to add a few things that I know a few of my ex-colleagues used to use in there, like parabolic, stop and reverse, and a few other things. But that's just to enhance the opportunity, not my key trading signal. Now, the banker's trading system, this is, as I said, it's very methodical. You're going to plan the trade and trade the plan. Now, it's a very simple structure that you need to get into, or simple process. Now, I've quickly summarized it here. You know, you're looking to evaluate the market every time you come back to your screens. Okay, and this is where, funnily enough, where a product like Metastock comes into play, because if you can't, if you've got MT4, all you can see is where the currency's been. It doesn't tell you about anything about direction or what's driving the markets, and that's the key component. So evaluation is the first thing. Now, that's whether you've been out of the market for an hour, you've just woken up. You know, if you've been away from your screens for any substantial sort of period of time, you need to evaluate to see what's going on and what's driving the markets. Next part is just planning. Plan the opportunity, right? Don't just buy just for the hell of it, just because you think that it's going up. Isolate the best technical setups and the pairs with clear direction. Then once you've done that process, it should lead you into what strategy you should be using, okay? Whether it's a range break, a false break, or a trend trade. Then simply coming back through that after you've evaluated, planned, you think you've got the strategy, just double check, okay? Cross-check your thinking against upcoming economic data releases. Are they going to impact the actual trading opportunity? And also have a look at the cross currencies related to the main pair that you're trading to make sure they're moving in the same direction. We're talking about correlations, okay? Once you've got those things, right, that's it. Don't go looking for other answers. I mean, there are, as I said, there are things that you can add in there like probability enhancers, whether it's stochastics, some sort of moving average or the like. But once you've got everything in place, it's time to execute the plan. Okay, this is where plan the trade, trade the plan. It's quite simple. Place the order in the market and prepare to trade live. Okay, so now let me just come back across here. And I just want to run a few different across here to the charts. Now, first thing you do, right? So this is like a simple structure of looking at the market, you know, as a professional. So I was just going to sort of say, like with clear vision, but this is what the traders do. So I've got the majors here, right? So I've got the Aussie, Kiwi, Yen, Euro, Sterling, and CAD, right? So these are would be the major pairs I look at. I know dollar Swiss isn't on here. I actually have it has its own template, but I know it sort of follows mainly Euro, so I can sort of have a very clear idea of what's going on. But technically, right, this is all you're looking to do, right? You're looking to sort of go through your charts and find out where the support and resistance levels are. Now, this is one part I'll come back to once I've gone through some of these simple aspects. Our Forex Pro Trader course will run you through the simplicity of technical analysis. But basically what you're trying to do is connect the highs, the most recent high to the next most recent high, and funnily enough, this is where you'll start to see where the levels come out. Once you've got two touches, that's the start of a good trend line. Okay, now if I just delete this this trend line here, now we've got the high here in the Aussie, we've got the next highest level right here. Okay, that's the start of the trend line. Now, the third touch, okay, it hasn't quite got there. There's probably no major trading opportunity at this stage if you were thinking of getting short. But then you can see this next level over here around 79.09. Now, this is where this trend line comes into play. It's no surprise that it's probably just had enough momentum to pop through this level, but it has actually pretty much stalled at that trend line. Now, once you've got the break of the trend line, okay, it's just a simple matter of adjusting the height, the trend line. Now, this trend line here has got 1, 2, 3 touches. If the support or resistance trend line has 3 touches, that would be validated as a good support or resistance trend line. And that's something that you should be looking for when you do have trend lines with 3 touches. This is a potential trading opportunity straight away. And if you did have a blotter or a pad in front of you, you'd be writing down the Aussie, say resistance. I've got a good trend line on the top side. And then, as I said, this is like joining the dots. Your kids could do this sort of stuff. On the downside, it's the exact same process. So what I do is I actually just go through a process, and this is where, once again, the tool comes into play. I'm just bringing more profile into the charts. Now, I trade, and the bankers trade off the hourly bar charts, right? You can use candlesticks for that matter, but as long as you're concentrating on the highs and lows. I mean, there's so many different theories around technical analysis and bars and candlesticks. You can actually get yourself sort of caught up in the methodology of the bar or the candle. Now, I can tell you, after in 20 years, on the frontline traders on the desk, very, very few, if any, had candlestick charts. All the sales guys did, because they could tell a bit more of a story around shooting stars and all these sorts of things. But the traders were only interested in the highs and lows. So on the downside here, you can see, okay, we've got a very clear structure. So technically, don't forget, when you're looking at your charts, you're not looking for anything else except for levels. You want to identify technical levels where they've got 3 touches and that's it, right? You're not looking for it up and down at this stage. We'll come back into the overall trend. That's where you get into the longer term charts. Now, I'm on the daily chart here. You can see the Aussie quite clearly is in a bit of a short term, well, over a long period of time, from 68 up to 80, sort of just above 80, okay, in a bit of a sort of uptrend, but overall it's still sort of lagging. And if you go into this shorter time frame, you can see that it's actually dropped from sort of 81 down to sort of 77. It's in a bit of a short-term downtrend. So all we're trying to do with your charts is isolate the best entry and exit levels. Now, this is one area. Let me, before I just go into some other charts, drawing a level from the most recent high up the top here to this current level is a mistake, right? That's sort of 1 touch at the top, 2, but that's just to the current market level. Now, that's not a resistance level. Now, there are other theories around sort of drawing horizontal lines. As I said, if it's a horizontal line, you've got a triple top, well, then that works. But generally, the guys at the banks are looking for support and resistance, and they're looking for lines that touch 2 or 3 times. Okay, so that's the simple process that you're going through with your technical analysis. Now, when it comes back down to fundamental analysis, let me just come back to the main screen here. So what we're looking at is, the economic data primarily. So these numbers, right? So once again, the fundamental aspect of the market can be a little bit daunting, but it can actually be quite easy to understand. Now we've got all these economic numbers coming out, and you don't need an economics degree to get this thing right or to understand where direction comes from. What we do have is we have a situation where you've got some of the key releases. Now, down the left-hand sort of column, just before the indicated name, you've got these bars. Now, a 3-bar sort of number would be a high impact release. That means that data is important to the central bank and will have an impact if it is somewhat variant, small variance in the market. Now, what you can do is, you have the luxury with XENITH of setting up your economic calendar with low market impact. You can just show the medium market impact data or the high market impact. Because you're trying to isolate the potential opportunities where the currencies will change momentum very quickly. Okay. Now, what we're trying to do is, once again, with direction, right? So these fundamental numbers give us the direction. We match this up with our technical analysis, those trend lines. So if we have clear direction, say it's up, and we have a resistance trend line, well, then you know exactly what to do. You're a buyer above that resistance trend line, and you're going with the momentum in the market. Once again, you're trading with the market. Okay, that's what the whole aspect of trading professionally is. You're waiting for these events that could potentially provide momentum in the market, and then you're simply applying the strategy to the opportunity. Okay, so one of the key things now, so coming back in, so if you don't have a service, right, such as Reuters, or Bloomberg or whatever it is for that matter, then you are sort of sadly going to be, trading blind, right? What you want to do is you want to know exactly what's going on. Now, when we talk about what's going on in the market, now one of the key things that we do and we train our traders to do is actually come back into the market and look at the, what's driving the currencies, okay? And this is where your general news comes into play. Now, I've got a number of different news features here because, the product here, XENITH, is so massive, you just need to know where to look and what to look for. So I've got the sort of main news here about what's sort of going on sort of globally. I've got commodities market news here that I can actually glance through as well. These are sort of like summaries that I can click into. But most importantly over here, because we're trading Forex, okay, you want to have access to what's driving these major currencies. So now you've got up the top here, dollar against footing versus the yen, Swiss franc in choppy trading. Now this, one of the key aspects of why we look at this is, if you're looking at the markets and seeing, so say for instance, the US dollar, it's actually trading sideways, right? You need to know why it isn't going up or why it isn't going down. And that's where your sort of news comes back into play with regards the Forex. So you're looking at the markets, you can click into these news stories, and it's very important you understand where the direction is coming from. So if that news is reversed, you can actually trade with the market once again. Now they're talking about the dollar recovery, the whole aspect between this China-US trade tension, right? It's a bit of a nightmare, right? Because unlike the economic numbers that I was just showing you there before, which are laid out a year in advance, these geopolitical events are random. There's no set start time and end time to the whole issue, and you don't know when they're going to be providing updates. And that's where the markets get a little bit what we call choppy. If the markets are choppy, well then you've got to be very careful about what you're doing. So in its simplicity, I've sort of rushed ahead and gone into a bit of the fundamental aspect, but one of the key things that I really sort of want to get across is it's the simplicity, your charts, your entries. Well, let me just get that up. It's me surfing at the back there. But so once you've got your charts in place, you can look for your levels, right? So the whole focus each day is your job is to go through your charts and isolate the currency pairs with the best technical setups. Now, this Kiwi has broken higher. Now, these trend lines here are no good to me. Once the currency's actually moved, the currency pair itself is, those trend lines are now sort of null and void. So I just need to delete them and actually have a look, see where the next level is. And as you can see here on the Kiwi, the next level here is 73.86, right? So if I was looking at a trading opportunity on the Kiwi, my first assessment is the currency's in the middle of nowhere. Now, stochastics, it's a little bit overbought, but I don't have any good trend lines to work with. Direction itself, you can see how it sort of gravitated around this trend line up and down through it. That's like a bit of carnage, right? And I got stopped out on the Kiwi just the other day, and I've sort of left it alone because I haven't got that clear direction. All right, so what you do is, now if you are looking to become a professional trader, don't isolate yourself to one or two pairs. Now, dollar yen, for those who are wondering what the hell that cloud is, that's the Ichimoku Kinko Hyo cloud. Now, when I was at Citibank in Tokyo in the early to mid 90s, you know, I spent a lot of time in Tokyo trading with the old senior Japanese traders. All they did was look at the cloud, right? It's a one big giant moving average. And it works specifically in the Asian session and the Tokyo session in particular, because that's what everyone looks at. They don't draw trend lines. So it's very important, if you are looking at the yen or the yen crosses, particularly in the Asian session, that you look at this trend line. Now, I mean, at the Ichimoku cloud, now I draw trend lines on there as well because everyone else uses trend lines. So it's a bit of a combination of both. And what we're looking for is potential opportunities, say, around the cloud and the trend line itself. So as you can see, once again, and if I just draw this trend line in, you can see where this trend line starts. Okay, it's got 1, 2 touches. It came up here to the third touch. I end up getting short here, and once again, end up getting squeezed out because the direction wasn't coming from the economic numbers. It was coming from a geopolitical event, which is a little bit random. And that's one thing to understand when you're looking at the markets. When you look at the news, is it central bank or economic data driving the market? If it is, it's usually a much easier trade. If it's a geopolitical issue, well, then it can get a bit cloudy and it's very hard to isolate direction when it's going to move. But just looking at this opportunity here, once again, now dollar yen, you can see how it's gravitated around that trend line. People and this is one fact you have to understand. Now, the way the bankers trade, it's the way all the banks trade, right? All the guys at the banks. 95% of volume goes through the market around trend lines. That's why these are so important. Now, you can see how sticky this trend line has been, and this is what we call the barroom brawl, which once again, we cover in detail the price action around the trend lines in the Forex Pro Trader course. But you can see it's actually sort of flushed up and down here, dropped down, and then shot back up. Now, this is what happens when you've got geopolitical events. No clear specific direction. And once again, dollar yen is in the middle of nowhere, so there's nothing to do. So once again, all I'm looking for on these technical analysis, this process of looking at my charts, I'm trying to isolate the pairs that have the best technical setup, right? And that's all you're doing with your charts every day is actually having a look at this profile. Now, one pair that has been sort of, you can see here the movement up and down on the parameters here to these trend lines has been a little bit choppy, but if anything, euro has a little bit more structure to most of the other pairs. That's because we've been getting a little bit of, the dollar has been sporadically been strong. Euro has been, we've been getting a little bit of weak data. It is starting to trade sideways, but we do have support and resistance trend lines. So you'd isolate euro as a potential trading pair. Now you've got one, that's the previous resistance. You can almost count that as 2, say 3 touches here on the top side. You've got an active trend line that you know the bankers will be trading. Okay, so and it's just a matter of each day of adjusting your trend lines to the most recent highs and lows, and then assessing whether these trend lines are good or not. This one here, 1 touch at the top, so 2, and then it's broken through. Now, once again, and when this is all I'm doing is showing you the live markets. One of the key things is you can't manipulate the market. It'll give you what it gives you. Now, if trading conditions aren't awesome, and this has probably been just since this trade war has started, it's been a little bit sporadic, and that's what you sort of get. So all you can do with your technical analysis, and if you don't have, as I said, if you're using MT4, the functionality of your charts and your drawing are not going to be good enough for you to start being consistent with the trading. Now, when I'm going through basically, trading with the market, lining up your technicals, your entry levels with the fundamentals direction, okay, that's in its simplicity. Once you become more experienced, then you'll start to work out certain pairs have certain characteristics. Now, dollar CAD, for instance, I've overlaid here. You can see a bit of a green bars through there. That's actually crude. Okay, so what we've got is and that's the futures. So what we're looking at is dollar CAD and oil have a very close correlation. So what I've done is I've actually, if you look at the left-hand column here, I've inverted oil, right, to match up with dollar CAD, because it has a positive correlation with the CAD. And because dollar CAD is quoted with the US dollar as the base, I need to flip the oil upside down so I can see that visually what's going on. So if I start to see that green, those bars going down, well, then dollar CAD should go lower. And as you can see, you'll see how this correlation works very closely when you overlay it on the chart. Once again, you can't do that on your standard MT4. All right, so what's the process? So first and foremost is you come to your charts, you go through your majors. Now the next other part would be you start to go through your crosses for each major pair as well. Now if I come back to each major pair, now we have set templates for each major currency pair. Now, for instance, here's the euro. Now this is one of the simplest things that you can do to make it visually easier to see what's going on. So I've got euro here. I've got the hourly chart, I've got the daily chart, so you can sort of see exactly what's going on a short-term basis, as well as the longer-term basis. I can also see, what economic data is coming out next. Okay, unemployment rate out of the Eurozone came out as expected. Now, next data out of Europe that will impact is the industrial orders and services data out of Germany. And then you've got some PMI data coming out of Europe. You've got the news here, like overall major news, and then I focus in on the Euro news. These are all the bits and pieces that you need to know. These aspects here at the top, from even the indices, which are moving things at the moment, the news and the economic data, you would consider that as the fundamental aspect of the market. And obviously underneath that, you've got your charts, you've got the two parts to your trading sort of structure. You've got your charts, your technicals, which give you your entry levels, and then you've got the direction coming from the data at the top. All right. Now, and once again, one of the key things about being a professional trader is actually being able to be patient and wait for these opportunities to arise. Now, and this is actually a very good example here. See how sterling's just been trading sideways. Now, you can draw. Technical analysis itself is very subjective, but this is where I would potentially draw in a horizontal resistance line. You got a touch here, say 140.96, so a nice big round number at the top. You've got, it hasn't been above that level since it's been below on the 29th of March. So now that's not long, but it's been a week. So what you would expect is a buildup of stop losses above that level. All right, this could be a simple trade on sterling to the top side. Now, if nothing happens, it's just going to trade sideways. Now, this is where you would look at the economic numbers at the top here and you think, well, okay, what day is it today? Well, we're heading into the 5th of April, and in the European session, we've got the services PMI data. Now, this is a pretty aggressive data release, okay? With that, you think, well, if that data is strong, I've got a potential resistance line here. So above 141, the figure, I've got a pretty good trading opportunity. All you need to do is, once you work out where the orders are, where the technical levels are, work out where the fundamental driver, the direction is going to come from, and then you've got a trading opportunity. And you don't have to sit in front of the screens for 12 hours and wait this. You identify the level, you know what time this data is coming out, and in actual fact, you don't even have to wait for that. You know if it breaks this level, there's going to be a lot of stop loss orders above this level, and that's where you place your order just above 141, buy stop entry, and then let it run. Okay, so that's like a nice little example of how all of this sort of comes together. Now, what we've done is, because once again, knowing how to trade, it's twofold. You need to understand how the market works, first and foremost. And then secondly, you need to understand how to access the data. And what we're talking about is Reuters XENITH. Now, let me just give you a bit of a run through how we translate the Reuters that I was just showing you into your trading system. So this is the back end of our members area that you get access to. Now, the MyFX Trading Hub is a tool, is the first page that everyone gets access to. It'll tell you when the next major economic data event is. Now, why that's important is that's when momentum will change specifically for sterling, right? This is something tangible. These economic data releases are something tangible that you can hang your hat on, right? That is a very important release for sterling and the sterling crosses. Now, it doesn't mean you have to wait for that to trade, but just be aware that that is the next major event. Now, you can go in there and get some more details on that. But one of the other parts is, and I mentioned this before, and I didn't really sort of run through it when I was looking at the charts, but you don't need your charts to understand where the correlations are coming from. Now, on the left-hand side here, we've got live quotes. Now, I've lined up the quotes here in a very specific order. See how the euro, sterling, Aussie, and Kiwi, okay, the US dollar is the terms currency, which is the second currency in the quote. The ones below it, dollar CAD, dollar yen, dollar Swiss, and the US dollar down the bottom there. So the US dollar is the base. Normal market conditions, you want these major currency pairs correlating. And what we're talking about is the currencies with the dollar as the second quote, you want them all working in the same direction. Now, they're all green here. And all the ones with the dollar as the base are all red. That's actually perfectly correlating markets. Now, to me, that is a signal that we've got good market conditions, good trading conditions, because the currencies are behaving all the same way, right? So that's something actually you should be looking at very closely. Every time you come back to the market, are the majors working together? And what that generally means is the US dollar behaving the same way against all the other pairs? If it is, well, then market conditions are very good. So that's an easy way to understand where things are. Now, when it comes down to working out what's going on in the market itself, okay, you come down to market insight. This is where we sort of cover, you know, when you come back to the market, and say, for instance, I was looking at the news page there before. What we sort of run through here is a bit of a summary of, you know, where's the money in the market today? You know, as I said, I've got 28 years experience trading Forex, but a lot of people don't have the time or the experience to analyze the markets as quickly as say I would. So what we do is we give you a bit of a run through about what's going on, what's driving the market, so you understand what activity is going through and how you should play the market out. You know, and we're looking at sort of specific opportunities, and then going into each, whether it's the Asian, European, or North American session, having a look at the best opportunities there, the technical setup of the majors, so you can get a very clear visual of what's going on, and then isolating the potential fundamental drivers. These drivers, once again, is where direction comes from. Okay, so that's one aspect that, once again, you come back to the MyFX Trading Hub, check out the correlations, see what's going on there, make sure the markets are behaving normally. If these were out of whack, it would be a bit of a problem. It'd be a bit unsettling, and you need to go sifting through some of the news to try and work out what's going on. So we've got the market insight, tell you exactly what to focus on and what's driving the markets. And then you've got the next upcoming events. Now, this is a shorter week with the Easter break, UK services PMI, and then we come down to really the markets will be on hold later today as they prepare for the US non-farm payrolls. Now, the non-farm payrolls is probably one of the most explosive releases in the market. It's not to be sort of messed around with. You know, if we've got good technical setups on the majors, then there's trading opportunities. Outside of that, trading that live can be quite disastrous because the liquidity comes out of the market, the volatility increases because of that less liquidity. It's not happy traveling. Anyone who's sort of really telling you that watch me trade the non-farm payrolls and get involved, I would say they don't have a lot of experience, and they're trying to get you to trade for some other reason. Because a lot of professional traders that I know with my level of experience or even more, you look at that, isolate a potential trade if there is one, generally around a technical setup, using the non-farms as the driver, and then placing trades around that, not just trading live, because this thing can shoot up, shoot down. There's 2 or 3, 4 variables that come out at once. You can have one strong 1 week, shoots up 50 points, down 70, back to exactly where it was, and you're sitting there licking your wounds, wondering what the hell happened. So that's one key area that I would just sort of bring your attention to, is understanding which data releases are tradable, and a lot of them are, which ones give very clear direction and which ones don't. All right, so then once you've got your you've done your charts, one of the key parts that we look at straight after that, and this is part of the daily analysis, we look at just generally give you a bit of a snapshot of what's going on. Now, this snapshot, this is what you should really be sort of focusing on too. See, just first of all, on the right-hand side, I'll focus on the technical side. That's the easiest. I've got 3 different time zones here: hourly, daily, and say weekly charts. What we're looking for is uniformity across those, at least 2 of those time frames. If you have sort of just trading sideways markets, and say you've got one of these time frames with, say, clear direction, well, there may be a slight technical trade there, but it's probably not good enough to really sort of load up on. When you've got a situation, say like dollar CAD here, where say on the dailies and the hourlies, it's going down, well, technically this thing is going down, and you should be looking to sell, whether that's selling on rallies or sell through support. And that's where you start to look at your charts and go, okay, I'm a seller, where can I sell? That's why you've drawn your trend lines in your charts, because you've got a resistance level on the top side, you can sell back towards resistance, or if you've got support, you're actually selling as it breaks through support. And this is a very simple structure. Dollar yen, for instance, has 2, like on the weeklies and dailies, it's pointing down. The hourlies, though, it's going up. Now that, to me, that one up arrow nullifies one of these down arrows. So we're back to a waiting situation. And as you saw on that dollar yen chart, it was a good decision yesterday to hold back on dollar yen, because direction for the dollar on dollar yen, or the yen itself, was a little bit indecisive, because there's mixed news about China and the US trade wars and all those sorts of things. So you wait. And this is where your technicals, all you're looking to do is work out objectively, like not subjectively, okay, is it going down on a weekly basis, daily and hourly? If they are all lined up, like dollar Swiss, okay, this is clear cut. It should be a no-brainer. Once again, you don't overthink it. You're just technically thinking, well, I'm a buy here, okay, because on the hourlies, weeklies and dailies, this thing's going up. So yeah, you're looking to buy. So you're looking to buy back towards support or on a break of resistance. And you're just going through this process each time you come back to the computer. Now, when I say actually each time you come back to the computer, traders, well, generally speaking across the globe, are human, right? So when do they do their analysis? It's at the start of the day. When I worked in Australia, we get in the first thing in the morning around 7 a.m. In Sydney, you go through your charts, and that's where you do your analysis. When you're in London, and I worked at Citibank in London, you get to work same time, but it's the morning in the UK. That's when all the traders at all the banks in the UK do their analysis. When I worked in New York, you do your analysis, funnily enough, as soon as you get to work at 7 a.m. So basically, when do you redo your analysis? You should do it at the start of each session, because then you're refreshing your technical view the same as the market that is open. And the market that is open will control the volume in the market, and that's most important, right? The whole aspect of trading with the bankers and what they're doing, and the simplicity is they control 95% of all the volume that goes through the market, right? So there's a lot less of them than the retail traders, but because they control the volume, you need to understand how they analyze the market technically and fundamentally. Now, the fundamental aspect is one of the key parts that you get more, the more experience you have, the better it gets. Now, at the moment, see over here on the left-hand side, now we've got the fundamental outlook. You can see it's pretty much sideways across the board. Now, down the bottom here, the US dollar, the Fed is still in a very, to me, they're raising rates. They're the only central bank raising rates. They have a projected forecast to raise rates another 2 times this year. That, to me, is an upward bias. And if the economic data has been somewhat sideways, well, then the central banks win. They are the most dominant directional force in the market. So to me, fundamental outlook for the dollar is up. But technically, okay, for the dollar index, it's all over the shop. Long term, it's down. On the dailies, it's sideways. And short term, yeah, it's been going up. If anything, it's probably sideways from here. So we've got a situation where we're going to wait. But I do have an upward bias in dollar yen, in the dollar index. Dollar Swiss, the central bank, the Swiss National Bank is always pretty neutral. The data has been neutral. So fundamentally, as far as the Swiss is concerned, it's a bit of a sideways. But we do have a nice technical setup, so you'd have a technical trade there. So as you can see, this is a nice methodical way that we've set up a daily analysis snapshot, which is captured at usually after 5 p.m. New York. Now, 5 p.m. New York is the refresh. It's the start of a new day. Okay, all the positions roll over at 5 p.m. New York. As far as the global trading community is concerned, it's a brand new day. 5:01 in New York is the next day, right? So it's after 5, so we are now in the 5th of April, and we're trading that day. So you're looking at your analysis. So technically and daily, this is something you can do, even setting up, a sheet on your desk and actually trying to isolate fundamentally what's going on. Technically is very easy, and then work out whether you're a buyer and seller. And as you can see, being a pro, it doesn't mean you're trading every day. Like this situation here, we've got two major pairs. It doesn't mean there's not opportunities on the crosses, but we've got two major pairs here which have, say, clear direction. Dollar CAD and dollar Swiss. The rest of them, you're just waiting. Now, it doesn't mean you don't go looking through the crosses. Now, the next best trade list, as I said, I got caught up. Actually, you know what? I got caught up. This is one of the key things you need to do too. And as I said, I've been doing this for a long time. I got caught up on Tuesday with a bit of media hype about China increasing the overall aspect of their tariffs on the US products and these sorts of things. That drives people to buy yen, the safe haven. Okay, they buy yen. They should be selling Aussie, selling Kiwi, and selling CAD for that matter. Now, this is after the Easter break. I've had a 3 or 4 day break. I was a little bit excited and got stuck into this. So one of the key things I was looking at is looking to get into the yen. Now, dollar yen hasn't gone much past where exactly I was looking at, but you know what? I got sucked into a bit of media, and that's I got into a bit of stale momentum. So you can see where technically the setup here is dollar yen is trickling lower. There's talk of the China, increasing the tariffs. The next expectation was the US would sort of retaliate with some more tariffs. And this is one aspect of understanding the fundamentals. And that's where the Reuters XENITH comes into play. So just looking at this, I've identified the technical level, which to me, with the cloud, and also I've only got a trend line there with 2 touches, but coming up to the 3rd touch, it's pretty good. It actually stalled there and dribbled off a bit. And then finally, when the US came out and said they weren't going to be making any decisions on retaliating with the tariffs, sure enough, dollar yen popped and took out the stop losses. So that's one there that I would sort of go with again, but I'll be a bit more aware, when it comes back down to just looking at the fundamentals, the drivers. This thing here gives it direction. You come back into dollar yen. We had, this is before the market was going up, everything was going down, so it was a selling opportunity for sure. But you know what? We missed one part of the trade. Now, what I did here, this is where you sort of professionals sort of analyze the market. If you've got a technical trade by itself, well, that's good, but that might be just half the normal trade size. If you've got the fundamentals and technicals working together, that's where I would put in my full trade size. So what you need to do around your capital management is assess the market fundamentally and technically. If you've only got one side of the market, well, there's probably a trading opportunity there, but it doesn't warrant you putting your full amount of capital on the trade. And this is one way you can manage your capital management, is via your analysis of the fundamentals and technicals. So these opportunities here, I had actually with both of them, because I had yen in both of these opportunities, I basically went through them and had a quarter of the trade size, because I basically doubled up on dollar yen. And I was actually so excited about dollar yen. I was extremely surprised to see that everything was a little bit higher. And I knew what it would be. It would be some geopolitical news out about this. So what we're doing with our next best trades is really highlighting the opportunities where there's a good technical setup first and foremost, and then trying to work in where if there's a good opportunity with the fundamentals in play. Now, generally, very methodical, and you should get used to this as well. When you see opportunities, you can see here how there's a lot of no trades, and some days you can see 3 or 4 good setups. We look at the setup, we place the opportunity in the market. If it doesn't come through, it doesn't come through, and you just cancel the order. But by going through this methodical process, you will end up finding a lot of winning trades, and then you should have a lot of trades that are not executed. Now, that's not a concern to you, it just didn't work out. You'll have trades that come out at break even, and then you'll also have a few losing trades, which is always part of trading. Okay, so one of the key aspects of what we've got is actually trying to connect you to the market, which is this most important aspect. And as I said, 90% of people don't have a connection to the market. And what I'm talking about is Reuters Zenith or Metastock's Zenith. So basically, with Metastock, if you don't have this connection, you can't see what's going on. What we've done is try and interpret this for you as best we can, so you can actually sort of work out where the best opportunities are. All right, and that's pretty much it. I mean, I've gone through, sort of rushed through a number of different things there. If you are sort of new to Traders for Traders and you are sort of new to the market, there's a couple of good resources here. If you come to the actual Traders for Traders site, you can actually get into a 7-day free trial, and you'll have full access to everything. The Forex courses, the Pro Trader course. I mean, these courses are quite massive. For those traders who are looking to become full-time traders, obviously we've got a funded trader program to push you through that. But one thing I wanted to highlight is, and it's a lot more expansive than what I've discussed today, if you go down to the webinar archives, you'll come across How Do the Bankers Trade. This is a 5-part series that will go into extreme detail about the process that the bankers use, and also it'll give you a lot more detail about Metastock Zenith. Basically, it'll show you how to use the product in a lot more detail than what I have today, and then there's a whole range of other things there as well. All right, so that's the main bulk of it is. Now, one of the key things working with Reuters, and this isn't, every time I sort of speak to Hunter or the team at Metastock, this isn't like a massive plug that I have to do, because this is the best product in the market. And as I said, I've actually said this to a lot of our clients, our monthly subscription, this is one of the things is, our trading methodology and system, it is, from my experience in the banks and, working in London, New York and Sydney, it's a bit disruptive to all the indicator and unprofessional education out there. One of the key things that I tell people, and some people, even to the point of paying a $99 subscription after their trial, they're like, oh, it's just too expensive. I'm like, well, you could pay 10 grand for something that doesn't make sense. But you know what? If you don't want to pay this, make sure you get Reuters or Metastock up, because this is your connection to the market. And if you don't have a connection to the market, you don't have the ability to analyze the market fundamentally or technically, and you'll be trading blind. And that's what I tell you what, that is just way too hard. If you want to make money out of this, and there's lots of money in the market, then you need to be trading like a pro. And it's using the tools, not only understanding how to trade the market through courses, say like we offer, but understanding the tools in front of you that will really give you the ability to make those trading decisions. All right, Hunter, I mean, I think that's pretty much a bit of a summary for myself. I mean, there's a whole range of things, but I don't want to sort of drag this out too much. One of the good things that the team have got, so one of the things is, I mean, I haven't been able to show you sort of every aspect of every template I have. There's so many different templates I have that, and as I said, I've got them geared up for specific currency pairs. This one is labeled Europe, where I've got Euro and Sterling. So if I'm trading the European session, I can actually concentrate on what is going through on those major pairs in that session. And this will enable you to actually build out your trading, so you can actually make sort of serious decisions around the market itself. And as you can see, like even focusing on the central banks, you can actually sort of go through here and work out exactly where they are in regards to the fundamentals, the economic data releases, whether they're stronger or weaker, interest rates, country comparisons. There's so many different things that you can do, and this is about enhancing your probability of success. The more data you have around a currency's relative strength compared to another, the better chance you have of being successful. All right, so Hunter, I'll just hand that back to yourself.
Okay, perfect. I appreciate it, Brad, and I wanted to thank you again for really breaking down how you use XENITH. I mean, when it comes down to it, Metastock XENITH it's a very, very large product, and that's probably its greatest strength, and it's a little bit of a weakness for those individuals that haven't used it before. Just to give you a little bit of, again, history to reiterate, this was a product. Metastock XENITH was a product that originally Thomson Reuters put about $1 billion into developing this news and fundamental analysis product. And the reason is they wanted to compete with the Bloomberg terminal. I'm sure you guys have heard of that. So they created this product, put $1 billion into it, called it Thomson Reuters Icon. Well, when Metastock, which was owned by Thomson Reuters for quite a while, when we divested from them, geez, I think it was 4 or 5 years ago now, we said, hey, we know that your professional traders, your institutional guys are paying, $1,500 a month for this product. We bet that the retail trader could actually benefit from this product as well. So we were actually able to get a subset, which in all reality, when you talk to individuals that have used Thomson Reuters Icon versus Metastock XENITH, there's really not a whole heck of a lot of difference between the two. All we had to do was essentially rebrand it. So rebranding it as Metastock XENITH, we're able to take the same tools that these professional traders are using, the institutional guys, the banks, et cetera. They're all looking at these tools. We're able to essentially provide that for the retail trader. Now, the trouble with that is the average retail trader is not necessarily going to use all the tools within Metastock XENITH. Now, when I was talking with Brad, we were talking at length for weeks and weeks on, hey, how do we get, how do we kind of package your methodology and how you explain Metastock XENITH very simply to your students. I wanted to be able to convey that and provide that for a wider range of students. And that's when we were able to, with a little bit of programming magic, we were able to actually take his workspaces. Now he has about 12, 15 workspaces, probably has more than that, but we took about 12 to 15 of them and we were able to package them up and into an installer. So everything that you saw today, all the workspaces that Brad is using, all the examples that he was using earlier, we're able to package that up to where you can just run an installer on your computer and do that. Now, obviously there's a couple of prerequisites for it. You have to have an active XENITH account. Now, if you don't have an active XENITH account, you want to try it out, you want to take a look at it, that's fine. Just go to the website that is on your screen right now, metastock.com/T4T3for1. Okay. Now, so many tools are included with Metastock XENITH. We're able to kind of narrow the scope a little bit for you with the Traders for Traders installation version, where it installs the workspaces automatically for you. Okay, but we want to give you the proper amount of time to really see how Metastock XENITH is going to affect your trading, whether it's going to be working for you. So what we did is we put together a 3-month trial. It's very, very simple. Normally, Metastock XENITH for the FX version goes for about $99 a month. We wanted you to have access to this for 3 whole months. So what we did is we said, okay, well, if you pay for 1 month at $99, we'll give you the 2nd and 3rd month for free. So you're paying $99 for a total of 3 months access to Metastock XENITH. And on top of that, what we're going to do is we're going to give you access to Brad's workspaces that you can just download there. So first prerequisite, you have to have XENITH and you have to install XENITH. Okay. You actually get an email that walks you straight through it. But if you want to, you can actually just go to metastock.com/T4T install. Now, this is if you already have a XENITH account, and this will actually take you straight to the installer. We've put a video up there with the install instructions where I actually show you step by step how to get his workspaces. But you know, and I don't like to throw around the term no-brainer a whole heck of a lot, but you know, this trial is breaking down to about $33 per month to have access to the exact same tools that the professionals are using, and be able to use the same resources that Brad has talked about. Now, I'm going to put a link in the chat box so that you can check out Brad's website. Let me throw that in here where he's going to have a lot more information. While I do that, if you have questions, go ahead and type them in the chat box. I know that we have a couple of questions so far. Brad, you mind sticking around for a couple of minutes for some questions?
Oh yeah, absolutely. No problem at all.
Okay. First question, do these geopolitical events affect crosses that aren't related to the US dollar and China? Example, Australian dollar, New Zealand dollar.
No, they actually do. But that's a very good question, because what you're trying to isolate, say for instance, the US dollar, it's just a US situation, and we've had a number of geopolitical situations out of just the US with regards to Trump and the Russian influence over the elections, his staffing, you know, that affects the dollar. The US dollar goes up and down. That's where you take the US dollar out of the equation and you do go into the crosses, because they should not be affected. So you've got Aussie against Euro, Sterling against Swiss, or whatever it is. But when it comes back down to this geopolitical situation with the US-China trade, it's actually quite in depth, because now if you were just trading the crosses, say for instance Aussie yen, well, you've got two aspects there which are affected by this. Yen, which is the safe haven because of all the uncertainty around the potential trade wars and the imbalance of global growth, the stalling of the Chinese economy, and the impact on, you know, the rest of the globe on that front. Australia is the biggest exporter to China. It is a direct impact on that sort of geopolitical issue, as is the yen. So what you can end up finding is when there's the geopolitical event is, say it's a war, well, it's easy to isolate the countries that are actually fighting. Usually it's the US against someone. But if it's something like this where it affects two big global powers, economic powers, and because China, you know, for whatever reason, manipulating their currencies and all these sorts of things has upset the US. Now that the China side influences a lot of different countries in the Asian region. You've got the safe haven play with the Swiss, gold, and say yen. And then you've also got the impact on the US dollar itself. So it's going to the crosses on this sort of geopolitical event will not solve the problem. Okay, but what you can do is you can actually, the good idea about going through your crosses is isolating the pairs that still have the best technical setups, because if this geopolitical issue turns one way or the other, you may have a good entry and a good trade on those pairs anyway. So I'll be looking at the majors and the crosses at this current point in time.
Okay, next question. Chris, you asked, how do I get the tabs on my screen that Brad has? Looks like you have a XENITH account right now, so just go to the metastock.com/T4T install, or go to the Traders for Traders link there on your, that's in your chat box right now. And there's actually a video with my sweet sultry voice that walks you right through how to install his workspaces. And I'll walk you through every single step. If you have any issues, you can contact our support at metastock.com/chat support, and they can walk you right through it as well.
Yeah, I was just going to say, just to add one thing there, Hunter. I probably did, but I was trying to get through that as quick as I could. I know everyone's time is valuable. One thing that you're looking at is you're actually accessing the market, and this is where you look at the market with a different set of eyes. Now, if you're new to the market and you're new to Metastock, well, that's where these templates come in, because they are set up for you to start reading the market like the pros, technically and fundamentally. And within a short period of time, you can actually see what's going on. It's like, hang on, I can see the technicals and I can see the either economic data or the news impacting this pair and that pair, and you can actually start to see the way the market's moving. And that's why we have the major currency pairs on the one page, so we can see the correlation, see what the impact of various news or news and economic data releases is having on the market. And then you can actually start trading with it. This is a new structure for a lot of people, because you're now looking at the market the same way, but the only way it works is by having the templates. You actually can easily get into it. And I remember as a kid, back in the 70s, when the TVs, you had to get up and change the channel. Invariably, you end up watching the same show all night because no one wanted to get off their butt and change the channel. This is about ease. If this is easy, if trading is easy, if analyzing the market is easy, you will trade and make money. And that's where this really comes into play.
Gary asks, how does the current use of high-frequency trading or trading algorithms by banks and large institutions affect the traditional manual trading analysis? It's actually a very good question.
Yeah, this is, you know what, a lot of the high-frequency stuff, the banks sort of shy away from it because they're liquidity providers. The high-frequency guys are usually sort of sub-tier funds, or they're sort of in the dark part of the web and all these sorts of things. What it does is they are sucking the life out of short-term liquidity, right? This is something that the regulators are looking at very closely. Basically, any sort of high-frequency stuff, whether it's a retail broker or a bank, if you're going to them, they will ask you what sort of trading, or they will analyze your trading. If it's high frequency, they will label it as toxic and generally try and cancel the accounts. Because what they're doing is the high frequency guys and the algos, they're picking up on all sorts of different variables, right? This is where you see sporadic moves up and down, which is not good for market consistency. It's not good for liquidity. So basically all they're doing is pulling liquidity out of one source and tapping it out of another, and actually sort of, if anything, it screws up the natural flow of the currency. So it's not a good thing. It was a very good, quick way to make some cash for high level IT guys. But I would imagine over the course of time, they will be managing that a lot closer, because especially around the, say, major central bank releases or major economic data releases like the non-farm payrolls, some of these algos are out there to pick up the first bit of price action and move the market. And that's why trading some of these events is haphazard, because you've got these algos and they're affecting general liquidity and short-term price direction. Within a couple of seconds, they're done, and it's all over the place. Sometimes they get smashed, sometimes they take the cash, but it's the high-frequency stuff is not a good thing in my eyes, anyway.
Okay. Last question here. Will the T4T installer override our existing workspaces? Ely, if you have current workspaces within Metastock XENITH, it's not going to override them. It's just going to give you the option to add in more. One of the things that we wanted to do with this installer is, again, just simplify the workflow, because I know that when I started working for Metastock and I was starting to get into Metastock XENITH a little bit, my eyes were all wide. I just started clicking on stuff, and you end up down the rabbit hole. But what we wanted to do is just simplify your workspaces. Now, you can add additional workspaces of things that you find within XENITH that you want to look during your daily routine or weekly routine. You can take away, the installer is just a starting point that's not going to take away from anything that you've already put into XENITH, and it's also not going to prevent you from adding anything else down the road to your workflow. Again, if you don't have Metastock XENITH, just click on the link in your chat box. It's going to take you to Brad's website. You're going to get Metastock XENITH and all of its tools for $99 for 3 months. You're going to get Brad's installer that's going to give you all of those pre-built workspaces. And obviously, you're going to also have access to his education and all the tools on his website. Now to wrap up here, Brad, I wanted to thank you again very much for this very good presentation. We have very few partners that do a lot of education with XENITH, so of course it is a great pleasure to have you on here kind of breaking down XENITH and the Forex markets for us.
No worries, it's been a pleasure. I mean, this is one of the things, I mean, as I said, I mean, endorsing products is one thing, but this is something that we use every day. All of our professional traders use every day. If you don't have it, you are trading blind. So I would suggest everyone have a look. That's a 3-for-1 deal. I mean, I know you didn't want to say it, Hunter, but it is a no-brainer. It is the best thing you will buy. It'll make that cash will make you more money than anything else you buy ever. Anyway, it's been a great privilege to present again. And we can spend hours and hours and hours on Metastock XENITH. It's a very massive product. The best thing I would say is get the product on, get the templates. That's going to give you the best foundations to start learning about the resources that this product has, and really set you up to become a full-time trader. Thanks a lot once again.
Yeah, thank you. And to reiterate, also, if you already have Metastock XENITH, go to Brad's website and just download the installer, or go to metastock.com/T4T install and get those workspaces and take a look. Brad definitely knows what he's talking about, and his education is very, very thorough. And again, breaking it, as you saw today, breaking it down to very easy to absorb chunks. Even for the layman like me. I wanted to thank all of you out there for attending this webinar. Hopefully you'll go ahead and follow that link to get your installer for free. Please let us know if you have any questions, metastock.com/sales chat or support. You can also contact Brad through his website. And as always out there, happy trading.